how we've seen the May auto sales beat expectations when it comes to Volvo Eicher, whether the strong sales are going to continue, what is the demand outlook when it comes to overseas markets. A lot of questions. So let's welcome on board Vinod Aggarwal, the MD and CEO. Vinod, hi, good morning. Good to have you on the show and hope all things safe at your end. Just looking at how the performance has been for you in the last few months, you've posted very good sales numbers in the month of May. Almost doubling the market expectations. How is it that you're seeing the demand trend in India, and how much growth in terms of revenue and margins can we expect this year, and whether or not you are going to see margin improvement going forward?
Good morning. As you know, these 2 months, April and May, had not been very good for the auto industry, mainly because of the lockdown. And also most of the RTOs were closed. So therefore, these 2 months are not the benchmark. But if you go to the Q4 of last year, I think the commercial vehicle industry had almost grown out of recession. So the numbers were very good. In fact, there was a growth of almost 50% in 3.5 ton GVW industry, CV industry. And we also had grown very well. We grew by 56% in Q4. And then, of course, sudden this pandemic wave 2 came in. But going forward, my expectation is that this industry is going to do well, because commercial vehicle industry has seen 2 bad years, both 1920 and 2021. And if you look at the numbers, the industry is down to the rock bottom. If you look at the heavy-duty trucks in 2021, the heavy-duty trucks which are 18.5 ton and above, those were just 111,000 as against peak number of 295,000 for the entire industry. And if you look at the 5 to 15 ton, which is light and medium-duty trucks, that also was down significantly. That was just around 75,000 as against peak of 120,000 in 18-19. So therefore, there is tremendous scope to catch up with the earlier peak, and in fact, if you extrapolate the Q4 figures, you are already reaching very respectable numbers. So therefore, I think this wave 2 is almost getting over. Lockdowns are getting lifted. Economic activity is going to come back, and as a result of that, I'm very hopeful that the CV industry will have good time in the coming months. And as far as we are concerned, if you look at our last year numbers, we had outperformed the industry in all the segments. The industry had dropped last year by 30%, and we had dropped by only 15%. So we had done relatively much better. And even though the volume, we had a drop of 15%, but our margins, you were asking about margins, our margins were better as a result of various measures that we undertook, like both on the price management as well as on the cost management. So therefore, I think the future going forward, CV industry is expected to do well, and we will also do well based on that.
Right. Also, Vinod, wanted to understand, that's what's happening domestically. But when it comes to exports, how are exports doing for you, and which are the markets which are seeing better traction as opposed to others right now?
When you look at exports, I think one good thing that has happened in last 2-3 years is that the technology of the products that we are making here in India, that has improved significantly. And as a result of that, the products that we are producing here, and that has a lot of Volvo Group technology in them, these products can compete very effectively with the Japanese products. So therefore, these products can become relevant for advanced markets in Southeast Asia, like Indonesia or Malaysia or Thailand, or in the advanced markets in Middle East or in Africa. So therefore, I think the potential for exports has grown significantly for us with the improvement in the products. And of course, the South Asian markets like Bangladesh, Nepal, Sri Lanka, they behave mostly like India markets. So combined with the South Asian markets, the other markets like Southeast Asia, advanced markets of Africa like South Africa or Algeria or Morocco or Egypt, and then of course Middle East. the potential for exports is very high. And in fact, last year also we had, even though the overall there were drop in the industry, but in export we had grown by 10%.
Sure. So suffice to say, Vinod, that your export margins are a lot better than the ones in India?
Margins are alike, I would say. They are not, we can't say they are much better than in India, but margins are alike. Like in India, they are also the similar margins.
And in FY22, what is the range of buses as well as trucks that we can see entering the markets? What's lined up?
Like if you look at our product range, we have the widest product range, right from 4.9 ton till 55 ton in the trucks, and in buses also we have the entire widest range of buses, right from, you can say, 15 or 18 seater buses going up to 60 plus seaters. So we have the entire range, and with the Volvo bus also becoming part of us, we have also the, you can say, the value range, mid-premium range, and high-end premium range. So we have the entire range in buses, and hopefully the buses market will start coming out of recession because of the pandemic. As you know, the schools are still closed, so therefore schools are not buying buses, which are the schools is a very important segment for buses. Similarly, staffing segment is also down because a lot of work is happening from homes. There is some demand coming from the route permits, which are basically permits for movement between the satellite towns and main towns. And then intercity buses also market is down because there is less travel happening. But hopefully this travel is going to come back, and schools also will open maybe from the second half of the current year. And with that, I think we will see better outlook for the bus industry. But as of now, of course, bus industry is doing very badly. In fact, last year the bus market was just around 12,000 buses as against 65,000 buses in 1920. So the buses market right now it's very low, but hopefully it will come up.
Okay, fair enough. And what's the outlook when it comes to the decline in your average selling price? We have seen that largely on account of the discounts that have been offered. So going forward on the pricing front, given the kind of commodity inflation cycle, what is it that we can expect on pricing?
First of all, the average selling price is not the right indicator because the product mix plays a very large role. For example, our product mix includes Volvo trucks. Now, Volvo trucks sell for 1.5 crores, or between 1 crores to 1.5 crores. And then there are light duty buses, which is 4.9 ton, which will sell only for 8 lakhs. Or if there are heavy duty tippers, they will sell for maybe 50 lakhs. So it depends on that how much we are selling for each product range. The average price will differ. So therefore, when you compare 2 years based on the average price, that doesn't give you the right indication that whether the pricing is improving or pricing is going down. It will depend on the what sort of mix we have this year and what sort of mix we had in the previous year. But at the same time, if you look at the overall margins, last year our margins had improved by almost 2%. If you look at the EBITDA margins, full year we had around, in VCV we had around 7% EBITDA margin against previous year of just around 4.9%. So therefore, overall margins have improved, and which is also the reflection of better price management and better cost management. As far as the pricing is concerned, I think right now it's very tough because steel prices are going up, and it has gone up significantly last year first, and there are further impending increases in the steel prices. So as a result of that, I think there will definitely be, the industry will have to pass on the cost increases to the market. So the prices will have to go up based on these steel price hikes and the inflation. And at the same time, we have to continue to work on the cost reductions so that we should be able to become more and more efficient.
Makes sense. I just wanted to understand what's happening when it comes to the digital transformation within the auto industry, because the last time we were chatting, you said that your buses are digitally connected now. How big an industry shift do you see happening here in terms of digital advancement amongst your products?
I think this is one of the major discontinuity that has happened. In fact, in VCV, 100% of the products, whether it is trucks or buses or various types of trucks, 100% trucks are connected. So whatever trucks we are selling, it means they are having live telematics connection in them. And it's very advanced live telematics, and based on which, when the trucks or buses, they are plying on the roads, they are always, you can say, watched by our uptime center. We have a control center which keeps complete watch on all these products which are running on the roads. And based on various types of analytics which we have put in our control center, we can even provide the predictive maintenance. Like we can tell in advance the truck driver if there is any impending problem in the engine. We will know it in advance. Like, for example, if the engine is overheating, or if the oil levels are coming down in the engine, we will know it sitting in our control center that so-and-so truck, which is there on so-and-so route, it is having this problem. And we can inform the driver in advance that, this is the problem with your truck. So therefore, either you stop here immediately or you just take it to the next workshop where we can fix an appointment for him in advance. Similarly, all our workshops, all the dealer workshops, they are now digitally connected with us. So it means we can provide the technicians who are working in these workshops, we can provide them real-time assistance. We can provide them remote diagnostics. For example, if they don't understand some fault in a particular truck, they can immediately connect up with our uptime center, and then we can guide them on real-time basis. And so it is very good for the customers. So these are for the uptime or for increasing the productivity on the roads. Apart from that, the customers get a lot of value-added services. For example, customers can manage their fuel efficiency much better. They can differentiate that which driver is giving them better fuel efficiency, because we provide them a driver-by-driver efficiency. And the fuel efficiency depends significantly on the way it is being driven. A good driver can deliver almost 20 to 25% better fuel efficiency. Therefore, if the principals or the transport owners, if they are able to know that which driver is giving them better fuel efficiency and which driver is not able to, they can, based on that, provide the proper training to the driver. So basically, all the digitalization and the connected services, these are going to bring major revolution in the entire way the business is being done, and the businesses are going to become much more productive. Customers will reduce their costs, and they will be able to reduce all the overall costs. So I think this is a major area on which VCV has done a lot of steps, and we are continuing to drive the digitalization more and more in the market.
It's so great to have you on the show. Thank you so much for taking the time out and speaking with us today.